In this video, I will share with you my 5 favorite cryptocurrency picks for incredible wealth in 2021. In today's video, I will be sharing with you some solid arguments on why I chose these cryptocurrencies, as well as sharing with you my personal price predictions for each one of them. Please keep in mind, this is not financial advice. I'm in no way a financial advisor, and this video definitely contains quite a bit of hopium. Before I start, I'd really like to thank Aave for sponsoring this video, but more about them later on. The first cryptocurrency pick is none other than Bitcoin. Bitcoin is considered as an unseizable form of private money or a store of value. And as a matter of fact, it's super hard to cure. I mean, many governments have tried to eliminate Bitcoin, to ban it as a currency in their country, but they have been unsuccessful. It's got a limited supply of 21 million coins. It's never going to meet more than that, and that's why it's considered by many institutions, governments, and so on as a new type of gold 2.0 that is a lot easier to transport, to sell, and to use as a hedge against hyperinflation. It's also got fantastic maturity of 12 years. And in the following chart, you can see the global total assets of numerous central banks. And in red, you can see the 12-month change of the Federal Reserve Bank. A scary amount of new money has been printed. So the printer goes brrr, and you will have to suffer the consequences of the next few years due to hyperinflation. What that actually means is that the price of goods get more expensive as the fiat currencies around the world lose in value. That means for $100 that you have in 5 years, you can buy less than you could today. Let's listen to Michael Saylor, what he has to say about hyperinflation and why it's terrible for large institutions that have a lot of cash assets.
And when we came into the year 2020, we had like $600 million in cash, and we were generating some cash, and we were saving our money for a rainy day. And we tried to be conservative. We bought back hundreds of millions of dollars of our stock, and we were investing the rest in short-term treasuries. And I remember when short-term treasuries used to yield 5%, and we would have been getting 30, 40 million a year. And it felt like, okay, responsible. And then the Fed just systematically cranked down the interest rates until it got to zero. And then we realized that, well, the cash generates nothing. And then the investors successfully told us they didn't value the cash as anything. Their view was it's just a lump of lead on the balance sheet. And the company it's almost like a liability. Like your cash is a liability. You either need to buy the stock back or give it to us as a dividend to get any credit for it. So we got to March and we thought, well, we have a lot of treasury cash for a rainy day. And then the rainy day came and it was pandemic. And when the pandemic hit, we actually found that everybody wanted the software. The software business is better than ever because we're just selling software to big enterprises and the like. But our costs decreased because now we couldn't do marketing events and we couldn't travel, we couldn't stay in hotels, and we couldn't go on airlines. And so the company went from having a lot of cash and generating a bit of cash to having a lot of cash and generating a lot of cash. And simultaneously, we saw all these financial assets have a V-shaped recovery. And then we saw Main Street have a K-shaped recovery, the famous K-shaped recovery where restaurants and airlines and hotels and amusement parks and theaters don't seem to be coming back. And yet all of these stocks and bonds are shooting through the roof. So on one hand, I realized I have a lot of cash. On the other hand, I realized I was going to generate a lot of cash. And then I realized it was worthless. And I realized it was worthless because the monetary expansion rate went from about 5% a year to 15% a year. And we actually expanded the money supply by 24% a year in the US this year. So everybody knows about money printing and all the stimulus. Well, I went from not caring to thinking, well, we'll save the cash, get a yield on it, and figure out what to do with it, to realizing that we're going to lose about 15% of our purchasing power every year for the next 4 to 5 years. And so a block of 500 million in cash looks like a melting ice cube. And it felt like highly certain that we were going to lose half of that money in 36 to 48 months if we did nothing. And so we arrived at the Bitcoin investment when we realized that cash is a liability, not an asset. We have to invest in something that'll beat the cost of capital.
I think what is very interesting is that contrarians to Bitcoin, at least they were contrarians in 2017, are now turning around and realizing that Bitcoin is a lot more and can save them in the dire economical situation that the world is at the moment. So big names such as JP Morgan are starting talking about the bad situation that the global economy is in, and the emergence of a new type of smart money which can actually act as an alternative investment to gold. So yeah, what is super fascinating is that the flow trajectory of Grayscale Bitcoin Trust has steepened by quite a bit in the last few weeks. What does that actually mean? Well, it means that there's been a lot of flow of Bitcoin Trust shares going out to institutions. What is super fascinating is that the flow of the Grayscale Bitcoin Trust has deepened by quite a bit in the last few weeks. So this is probably not retail investors buying chump change worth of Bitcoin on Grayscale Trust, but it's massive hedge funds which don't really have another alternative way of participating in the phenomenal growth of Bitcoin. That's why they're buying shares through the Grayscale Bitcoin Trust, because they want to participate in the phenomenal growth of Bitcoin, but they don't really have any other ways of doing it. They can't legally buy Bitcoin from an exchange. They have to go through the Grayscale Bitcoin Trust. And what is also incredible is that the Bitcoin shares on the Grayscale Trust have around 30% premiums. Furthermore, there's been a modest outflow from gold ETFs since mid-October, and that suggests that hedge funds, large institutions, family offices have been removing gold from their investments and possibly been adding Bitcoin. Large names such as MicroStrategy or JP Morgan have actually now eliminated the career risk for institutions to participate in this new revolutionary form of digital assets. Now, of course, Bitcoin is the most common one, and that's why it's going to probably lead the charge. And who knows? 2021 is probably going to be the year where the floodgates are opened and institutional investments pours into the cryptocurrency space, and the amount of money that can actually flow is just mind-boggling. My personal price prediction is at $100,000 at its highest in 2021. Before we get to the next pick, a fantastic asset class to invest in is the like button. Make sure to smash it, and let's get 100 likes on this video. The next cryptocurrency pick is Ethereum. Incredible amount of new financial services and tools entering into the decentralized finance space thanks to the Ethereum blockchain. It's one of crypto's most important platforms that can power an entire new financial system, bringing the old traditional clunky financial system onto the Ethereum blockchain, as well as introducing fantastic out of this world tools such as flash loans, which have never been heard of in the traditional financial system. And this is fantastic. The interoperability between all of these tools with each other creates a fantastic network effect. Ethereum has overtaken Bitcoin as a dominant settlement layer and has processed over $1 trillion in valuation. To put that into perspective, PayPal, with a market cap of $277 billion has processed between $800 and $900 billion in valuation in 2020 alone. Ethereum has a fast-growing decentralized finance space with a $20 billion market cap And last but not least, Ethereum is moving from proof of work to proof of stake, meaning that incredible performance upgrades will be brought to the Ethereum blockchain in terms of scalability, reducing the fees, and even at some point, turning the Ethereum and ETH into a deflationary asset. Before we get to my personal price prediction for ETH in 2021, let's find out why Aave is the top ranking lending platform and what they can do to increase the money in your bank. The money in your bank or under your mattress loses in value. That's why you need to meet Aave. Aave is like your bank in the DeFi space, where you can earn high interest rates by lending your crypto in a permissionless savings account. You can also use the deposited funds as collateral to buy some more ETH and increase your exposure. With an Ethereum wallet and just a few clicks, you can start earning high interest rates on many different cryptocurrencies. Try out the Aave platform by clicking on the link in the description below and start making your money work for you. With everything I've just said about Ethereum powering an entire financial system, it would be a bit of an understatement to say that I'm not super bullish on the Ethereum project. With that said, my personal price prediction for ETH in 2021 is $4,000 US. My third pick is Cardano, a third generation blockchain based on peer-reviewed research. Let's listen to Charles Hoskinson with this short introduction of what Cardano is all about.
So the world is upgrading so that we'll have a unified system where all 7 billion people, 8 billion people live under one financial operating system. So your identity is interoperable and universal. You can get a loan no matter who you are, where you're at. You can get insurance no matter where you're at. You can do business with anyone in the world in a friction-free way. The point of Cardano is to acknowledge that this must be done with principles. So what are we trying to accomplish? We're trying to push power to the edges and put you in charge of your own money, put you in charge of your own identity, put you in charge of your own voice, and give you governance and these types of things. So that when we get to that universal system, we get to an open, decentralized, principled system that can't be co-opted, highly resilient to people who try to come and tamper with it. And then suddenly the richest people in the world, the Jeff Bezoses of the world, will use the same system as the poorest people in the world, and both of them will have a better system than the system that came before it in both of those old systems. That's what we're trying to accomplish with it.
What I really like about the Cardano project is that it's mission-oriented. They're working towards DeFi, banking a banked financial operating system. It's running on a proof-of-stake protocol, electricity than Bitcoin, but offers the same amount of security. It's got 150 transactions per second layer 1 performance. Furthermore, it can be optimized to 1,000 transactions per second and even to 1 million TPS with Hydra. ADA is a deflationary asset, whereas Ethereum is not. However, they are striving towards that. The Cardano project created an ERC20 converter, which is incredible because that will allow Ethereum developers to convert their Ethereum dApps or DeFi apps onto the Cardano blockchain. The Yele virtual machine will allow many different programmers to start developing smart contracts with their favorite programming language like JavaScript, Python, C++, C#, and basically any programming language that is supported by the K framework. And this is great because at the moment, to develop smart contracts on the Ethereum blockchain, you have to know Solidity. However, Solidity developers can also start programming on the Cardano blockchain because Solidity will be actually supported by the K framework. I'm super bullish on Cardano and I believe it's a pretty good competitor to Ethereum. Now, when I create my portfolio, I like to use a strategy that I have named Umbrella Ice Cream Strategy. What that basically means is that a company will sell a lot of umbrellas when it's raining but no ice creams. And when it's sunny, another company will sell a lot of ice creams but no umbrellas. So when I create a portfolio, I try and find some projects that act as pretty good hedges against each other. So if Ethereum does incredibly well, it's possible that Cardano only does so la la. And if something should happen to the Ethereum project, then hopefully Cardano can step up its game and take over. So that's my investment strategy to reduce the risks should anything happen to one of these projects. And Bitcoin, of course, as a store of value. My personal price prediction for Cardano in 2021 is $1.20. My fourth pick is Chainlink. So Chainlink is a decentralized Oracle network. So basically a bunch of nodes gathering off-chain data. That could be weather data, that could be price data, and bringing it into the blockchain so that smart contracts can use it. Before Chainlink existed, there was actually a huge vulnerability to bring off-chain data onto the blockchain, but Chainlink created a secure link, secure bridge for this data. Chainlink can be used to bring data from bank payments, retail payments, market data, or other blockchain web APIs, events, and it can also create some random variables to be used in online blockchain games. That paint a super bullish picture for the Chainlink project. In February 2020, Polkadot integrated Chainlink on its Substrate network. In April of 2020, Tezos incorporated Chainlink in its protocols to provide price feeds to Tezos developers. In August 2020, Chainlink was integrated into one of Bitcoin's sidechains, RSK. And the recent Chainlink acquisition of Decor from Cornell University is seen by Sergey Nazarov as a big step towards mainstream adoption of the blockchain technology. My price prediction for Chainlink at the end of 2021 is $75. Make sure to subscribe to the channel if you haven't already. I'll be bringing out a lot more videos similar to this in the near future. Let's get to my fifth and last cryptocurrency pick for 2021, which is BNB, Binance Coin. Binance is a behemoth and one of the most popular and known cryptocurrency exchanges in the space. Every new trader, as well as veteran trader, is going to be trading his altcoins on that platform. Billions of dollars are flowing. And it just makes sense to save on trading fees because that's what the BNB token actually allows users to do. So with the BNB, you can actually save on trading fees. So one of the main benefits of the BNB token is the discount traders can get when committing orders on the exchange itself. The actual default fee every trader gets is set to 0.1% per committed trade. And with the BNB, you can actually save up to 50% in the first year, and it goes down for every year. Billions and billions of dollars being traded, it just makes sense to save 50% on fees because that can be then used to have more crypto in the end. You can also use the BNB token to participate in token sales hosted on the Binance Launchpad. More and more vendors are accepting BNB as a payment method. BNB is also used to power the Binance DEX, Binance's decentralized exchange. With $24 billion in trading volume per day, this amount is just going to increase, especially during the next bull run. And many traders, veteran or new traders who want to buy the hottest new altcoin is going to have to go through Binance to buy it. And it's just going to be a no-brainer to buy some BNB to save on fees. That's why my personal price prediction is $100 per BNB token by the end of 2021. That was it for today's video. Like if you liked it, subscribe if you loved it, and I'll catch you in the next video. Have a good one. Bye-bye.